Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C from the CNBC TV18 Prime Ionic Wealth Studios. I'm Manisha Gupta, back with your daily dose of commodities, crypto and currencies. Before we head to our guests for the day, let's take a quick look at the global equity markets. The stocks on Wall Street closed higher following that latest jobs report from ADP. The blue chip Dow Jones eked out nearly 400-point gain at close as investors parsed that the surprise fall in private payrolls for the month of November. This as bets mount over the likelihood of the Federal Reserve cutting rates in the month of December. Markets are now pricing in an 89% probability of a cut in the next week. It has been green across stocks in the Asia-Pacific, mirroring those gains from the Wall Street as labor market weakness in the U.S. fueled hopes of a rate cut from the Federal Reserve. Back home, the Nifty, after building onto those gains, has slipped below the 26,000 levels. Prices of Brent crude, in the meanwhile, have seen a bit of a gaining in ground, moves coming in after Russia said that talks with the U.S. officials in Moscow have failed to reach a compromise on a potential Ukraine deal that could have actually eased sanctions on its oil. And then you have the Indian rupee, which continues its slides and ekes out another record low for the day today. We have seen rupee not just go past 90, but we have seen rupee decline all the way until 1924, 1930 in the earlier part of the day. A bit of a gain coming in on your screens at this point in time. The dollar index also is on a weakening trend, now poised for a 7-day decline that would be the longest since the year 2020. Joining us now is Sakti Supath. He's head of Forex research at Maybank. Thank you so much for joining in. Sakti, how would you look at, first of all, the dollar index? Because this isn't going down as a very strong year for the dollar index itself. We're down by around 7 to 8% from these current levels, with the fact that the US Fed perhaps is going to cut rates going forward. How are you looking that impact? Is it already baked in? And from here on, especially for 2026, how would you look at dollar index?
Yeah, thank you. Thank you for having me here today. Essentially, our view for the US dollar index for the remainder of the year is actually very much focused, I think, on labor market metrics for now ahead of the Fed decision next week. So I think on top of that, I think concerns about central bank independence. Question is who's going to take over from Powell in May next year raises some concerns as well. I think that will be several of the factors that's going to affect dollar index. So our view is, I think the cut for December is largely priced in. I think markets are actually factoring the labor market data overnight. That will be priced in somewhat as well. So essentially, it's going to be either soft or somewhat flattish sort of move towards the end of the year. General view for the first half of next year, we think continuation of the easing will continue to weigh on the dollar. And like I mentioned just now about central bank independence, it could actually weigh on the dollar as well. However, in the second half of next year, we do factor in the fact that after the easing, I think there'll be some retracement in the run-up to the midterm elections. I think there could be some support on the dollar as we proceed towards the end of the year, and you might see a bit of sort of overall growth essentially sort of picking up as well, which should in some ways help support overall growth and US dollar numbers towards the end of the year. So I think you're probably gonna that's our general view for the moment into 2026.
Would you want to put a number to that, a range for the next year?
I would say another 2 to 3 to 4% into weakness into middle of next year, and then a tad up by about another tad up of about 2% slightly towards the end of next year. So you might see that sort of pattern to some extent, but of course the magnitude may differ depending on the volatility and how it ends towards the end of the year.
Talk to us also about Japan, because Asia somehow is very, very strongly in news. For India itself, we are looking at an all-time lows in sense of currency. China is another story where we have seen economy continue to slow down, even as there have been lots of conversation about more stimulus measures going forward. And then it's about Japan, where they are trying to tinker the interest rates. And with what the bonds markets have done in Japan, how would you look at overall Asian markets?
I think for Japan, expectations of that hike is the question of whether it could come on stream. I think especially with the governor already indicating that. So I think the play about the eventual hike, I think the sort of surprise element sort of is missing. We think that I think there's some element of possibility of one hike, if not at the end of this year and probably early next year, and then eventually limited to that. So we think dollar yuan can come off into the end of the year, but we are wary on the extent to which dollar yen can actually decline. Given I think the carry remains unfavorable for the yen at the moment. So we're looking at um, the yen probably around that 155 towards the 160 range. And then maybe sort of ease off because of the some of the dollar sort of softness towards the middle of next year, but then ease back up towards that 150, 155 range again by end of next year. It's subject to some of the policy moves, but of course, it depends on some of the developments out of the Fed into first half of next year.
How would you also look at the Indian rupee, if at all you're looking at India and the currency moves here?
Yeah, so for Indian rupee, it's we were looking at maybe some sort of strength coming back at the earlier part of this year on Indian rupee. But I think there's a bit of a turning point. It seems that RBI has stepped away from the intervention of dollar INR above 90. I think this despite earlier signals that the line in the sand for them was about 89 or so. I think the turning point may have been what RBI governor I mean, commented about the 3 to 3.5% annualized weakness in the INR is to be expected. I think that's because of inflation differentials with developed markets. So I think in addition to that, there are other negative factors also in terms of portfolio flow outflows, that trade deal concerns, and also the reports about deals with Russia going forward as well. So I think the purchases about defense purchases from Russia as well has helped to scupper some positive sentiment, if any. But I think in overall, I think in terms of dollar INR, it could be heading a bit higher. I think, but if the dollar sort of eases off, you might see dollar INR sort of hovering around the 85 to 90 range.
85 to 90 range. And this is for the next year, as you say, Sakti?
Next year, I would say there is a possibility around that range, but then in the end, towards the end of next year, possibility of moving back up above 90 again might come on stream, 90 to 95 range towards end of the year. But I think there are idiosyncratic risks out of India that will probably move regardless of how the dollar sort of pans out because of the Fed moves.
Sakti, coming on also on the US Fed meeting itself, I mean, we do understand that there's just so much happening in the international markets and there's a rush to complete it all because another 2 weeks and we would have gone in for holidays and then nothing would happen perhaps globally in next 2 weeks then. How are you looking at the US Fed meeting approaching now? The major general consensus is that one rate cut now and then perhaps three more in 2026. Is that exactly how you're reading it too?
Yeah, we're looking at that. I think consensus is around that level. Markets definitely, in some ways, pricing almost 100% move in December. The question is whether next year is going to be two or three. We're looking around at 2 to 3 cuts next year. Largely, it will be in the first half. And that's why also our expectations are probably in the second half, some of the easing sort of pressures would ease off, and dollar, after the fact as well, dollar would start retracing a bit towards somewhere in the second half of the year. But and also midterm elections that's coming up. So there's a range of factors coming up on stream, and then like I mentioned just now, concerns of central bank independence will definitely weigh on the dollar in some ways ahead of May. And you could see a bit of volatility and a bit more bias towards the downside in the first quarter or maybe part of the second quarter of next year.
Sakti, one final question, and this one is on the way the money seems to be rotating within asset classes. I mean, this has been a year that we've seen an all-time high in gold and silver and copper, and then multi-year highs in various other commodities as well. Would you see tangible commodities as a place for the next year as well, where you could be looking at some money being allocated or parked in?
Yeah, definitely. So we're looking at positive elements into commodity-related currencies, but also gold. I think there's definitely a space for gold. It has consolidated somewhat about around that 4,002 level, but I think we think the risk premium on geopolitical concerns, not just in places that we already familiar with, but also in terms of Sino-Japan conflict, it's somewhat escalated, but it's simmering. Or even if it simmers, there'll be one. And if any, I think with the tariffs still on stream up till end of next year, any sort of geopolitical risk rearing its head could have some impact. And I think the macro environment generally provides general support, for example, for gold and even silver for now. I think Fed easing. I think global growth is slowing. Inflation is lingering. If you add all those three sort of macro factors and macro environment, it sort of supports commodities like gold and some of the other commodities like you mentioned, silver. There's demand essentially as long as some of the manufacturing demand for the silver element continues to do so. But there's always this element that the supply could be a function of how the business cycle sort of moves for silver lah. Because there's some industry related moves that might ease it off as well. So
Mm,
definitely there's some room for some of that, not just to mention safe haven sort of elements.
sure.
It's always good to have some of the element inside.
Oh, well, absolutely. And as you said, whether it's about tariffs, macros, global debt, global growth declining, a lot of factors really to stay invested in precious metals, which are the safe havens in the market there. Sakti, thank you so much for joining in and weighing in on what really has to be watched going forward when it comes to the macros picture there. But with that, we will slip into a short break. On the other side, we will have all the conversation on one metal prices with Chirag Thakur of Amrapali Group after the break. Welcome back. You're with us on The Big C on CNBC TV 18 Prime. Joining us now on the show is Chirag Thakur. He's director at Amrapali Group. Chirag, hi, thank you for joining in. And what a week and what a year this has been when it comes to silver prices. 102% up in the international markets, 112% up in the Indian markets, given the fact that the rupees depreciated so much. But at these current levels, where the silver has doubled in an year, how are you looking at the overall demand? First of all, we do understand that this is going to be a record in sense of investment demand, whether it comes in via ETFs or physical buying. But how are you looking at demand still continuing at these current levels?
Hi, Manisha. Thank you for having me. So we already seen a roller coaster ride of prices and investments, and the lots of news factors which came in the Diwali season, the festive season in India, and globally, supply chain disruption moved all this which were actually priced in the current market prices of silver. So looking at the current scenario, the silver prices have been still up, and still there is no such demand sluggishness in the market. We don't see a new demand coming in, but we at the same time we also don't see a disinvestment coming in. So usually what happens when the prices go up, which is unprecedented, prices when it goes up, there is some silver disinvestment happening into the market. But this time, after reaching all-time highs, we are still not seen investors coming back into the market and selling the silver off for profit taking. We can see that in the international market, but in the local markets, we are still not seeing the silver coming back to the market.
Oh, wow, absolutely. And when you're talking about higher levels from here, who would want to sell silver currently? What's your sense, Chirag, on where are the prices going? Because most of the global banks are talking about 60 and 65 and 75, and there have been some reports talking about $100 an ounce for silver as well in the next 3 years, perhaps.
So if you see at the current scenarios, what are the factors coming in? Fed rate cuts and some short squeeze happening within the funds, within the positions. Also factoring in the silver getting into the critical mineral list. So this, I believe, this already all has been priced in into the market. At the current levels, we could see some profit taking coming in. We could see a consolidation mode in the near term, maybe in this month, because it's going to be a holiday season. It's going to be a dry market. So we could see more prices coming in and going out. But the down the line 1 year, I'm personally looking at silver prices hitting $65 very soon, and down the line 2 years we could see in three digits as well. We are very bullish on silver prices there.
Chirag, are you saying three digits in 3 years?
Three digits in 2 years, maybe. Yeah, we could see. Yeah, very much before 2027. I personally look at those levels coming in.
Chirag, we do understand that when you look at ETFs, it's 3,000 tons of a market right now. When you look at physical silver buying in India, that also has turned into a 1,500 to 2,000 tons of a market in this year itself. So there's been a lot of investment buying that we've seen in silver. As you mentioned, there would perhaps be a new category of investors that you will see come into the market. Where is this coming in from? Are you looking at institutions? Are you looking at HNIs? Are you looking at retail buying continuing?
So the last season and the current season, we would give those all credits to the newcomers, the new millennials, new generation who's flocking towards digital gold and silver. So the more of the investments coming on that side, and that is the main reason that there is no disinvestment happening into the market. If we would see ultra HNIs and HNIs flocking into the market earlier down the line, 2 years, 3 years, we would see them pricing in, coming back to the market and selling for profit taking. But I don't think the new investors, the new range of investors are looking to disinvest until unless they don't find a new horizon to put their money in. So that has actually been looking into the market. In September, October, we saw lots of investment coming in at these levels. Let's say if we have been 2 years back, we would see market throbbing, coming back into the market with physical silver going back to the market, but that's not happening. So it is a clear indication that the new investors, the new rain which has come in, they are not ready to take the profit taking at this current levels.
Before we let you go, come in on the gold price is also, Chirag, because we're looking at some stability coming in for this one. 4,200 seems to be like a consolidation range right now. How are you looking at this one going forward?
So on the gold side, if you see, Manisha, we actually expected last week when silver went so much high, we expected gold to have a follow through and at least try to go 4,350, 4,400, but we didn't see that. I think it's majorly right now in a consolidation mode, but we could see that price coming in. If silver steadies at the same levels, we could see $4,400 dollars by before this year ends. This is what I look at on the gold side.
All right. Chirag, thank you so much for joining in. So bullishness continues in case of gold and silver. Higher highs, new all-time highs is what we're anticipating in the next year as well. Well, this year has been phenomenal. An all-time high for gold and silver is what we've seen, and across PGMs as well, because when you look at platinum, palladium, all of that seems to be running up and away. Chirag, as always, thank you so much for joining in and making sense and giving us those very, very bullish targets in the years to come as well. With that, that's all the time that we have on this edition of Big C. Thank you for watching.